Last year, the average American paid about 30% of their income in taxes. Some even more. Meanwhile, the wealthiest people in this country, Jeff Bezos, Elon Musk, Warren Buffett, paid almost nothing. In some years, zero. In some years, less than 1%. And every single penny of it was legal. You probably think they have better accountants. They don't. They use the same tax code you do. The difference? The tax code was written for them, not you. And in this video, I'm going to show you exactly how it works, why it works that way, and what you can do to stop being the one paying for everything. Let's start with a brutal fact. There are 3 types of income in America, and they are not taxed equally. Type 1, earned income. That's your paycheck, the money you trade your time for. It's taxed at the highest rate, up to 37% at the federal level, plus state taxes, plus Social Security, plus Medicare, plus you can't deduct almost anything. Type 2, capital gains. That's money your investments make. Stocks, real estate, crypto. It's taxed at a much lower rate, as low as 0%, maxing out at 20%, even if you make millions. Type 3, business income. That's money your company earns, after expenses. And here's the secret. Almost anything can be a business expense. Your car, your phone, your meals, your travel, your home office. So if you earn $100,000 from a job, you'll pay around $30,000 in taxes. Take home $70,000. If you earn $100,000 from selling stocks, you might pay $15,000. Take home $85,000. If your business earns $100,000 after deducting $50,000 in expenses, you're taxed on only $50,000. You pay maybe $12,000. Take home $88,000. Plus, you already used the expense money for things you wanted. Same $100,000. 3 completely different tax bills. The system rewards owners and investors. It punishes employees. This is not an accident. Let me show you how the rich actually structure their wealth. This is the playbook. Step 1. Don't take a salary. Elon Musk, Mark Zuckerberg, Warren Buffett. Almost every billionaire takes a salary of $1 a year. Why? Because salary is the most heavily taxed form of income that exists, so they take almost none. Step 2. Get paid in stock. Their compensation comes as company shares, stock options, equity. These aren't taxed when granted, only when sold, and then only at the capital gains rate, which is half the rate of your paycheck. Step 3. Never sell. This is the genius move. The rich rarely sell their stock because the moment you sell, you owe taxes. So instead, they borrow against it. Yes, they borrow. When you have $100 million in stock, banks will happily lend you $10 million at 1 or 2% interest. You spend that $10 million on whatever you want. Houses, yachts, planes, lifestyle. And here's the kicker. Loans are not income. Loans are not taxed. You can live on borrowed money your entire life, pay almost nothing in interest, pay 0 in taxes. And when you die, your heirs inherit the stock in its current value. Reset, tax-free. This is called the buy, borrow, die strategy. And it's how generational wealth survives forever. Now you understand. The rich aren't dodging taxes. They're using a tax code designed to favor exactly the way they make money. So, why does it work this way? Because the people who wrote the tax code were not employees. They were owners, and they wrote rules that benefited the way they earned their wealth. Then they convinced the public that paying high taxes was a civic duty, for workers, not for them. Let's talk about the lies they tell you. 3 big ones. Lie 1. Your 401k is a tax-free way to retire. It's not. Not avoiding them. When you pull that money out at retirement, you'll pay your full income tax rate. And nobody knows what tax rates will be in 30 years. Spoiler, they're probably higher. Lie 2. Buying a house is the best investment. Maybe, but the tax benefits only help if you have a big enough mortgage to deduct. And even then, you're locked in. The real game is owning real estate that generates rental income. Because rental property has massive tax shelters built in, like depreciation. Lie 3. Saving money is responsible. Saving cash in a regular bank account is the worst financial move you can make. It earns less than inflation. So every year, you're losing money. The rich don't save cash. They own assets. Okay, so what do you actually do? This is where it gets real. You can't completely escape the system, but you can shift more of your money into the categories that get taxed less. Step 1. Get a side business, even a small one. The second you become a business owner, a whole new category of tax deductions opens up to you. Your phone bill, part of your rent or mortgage, your laptop, your car if you use it for business, your meals when you meet clients, even a portion of your travel. You don't need to quit your job. You just need an LLC and a few $1,000s of revenue. Step 2. Max out your tax-advantaged accounts. A Roth IRA grows tax-free forever. An HSA is the only triple tax-advantaged account in America. Tax-free in, tax-free growth, tax-free out for medical expenses. A 401k with employer match is at least free money, even if you'll pay tax later. Step 3. Buy assets that produce income. Index funds, dividend stocks, real estate. Once you own things that pay you, your tax rate drops dramatically because that money is capital gains, not earned income. Step 4. Hire a real CPA, not hand or block. A real CPA costs $500 to $2,000 a year, and they will save you 10 times that by knowing the rules the rich use. They will find deductions you don't know exist. If you're paying hand or block $200 to file a basic return, you're leaving thousands on the table. Here's the truth. The tax code is 70,000 pages long. It is not designed for the average person to understand. It is designed to be navigated by the wealthy, who can afford to know the rules. But now you know one of those rules. The system rewards owners, investors, and business owners. It punishes employees. So you have two choices. Stay an employee, pay 30% forever, or shift, even just a little, to the owner side, and keep more of what you earn. If this video opened your eyes, hit subscribe. I'm breaking down the financial system every week. The stuff school refused to teach you. The stuff the wealthy don't want you to know. And drop a comment below that you're going to look into this week. Thanks for watching. And remember, the rich don't pay less in taxes because they're smarter. They pay less because they own the things the tax code rewards.